The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good afternoon from TFNN. Welcome to the November 11th wonderful Wednesday edition of today's Trader's Edge show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. And thank you to all of you veterans that have served this great country. I hope that you're having an extraordinary day. Of course, each of us need to have an extraordinary day, and the easiest way to do that is to always remember that life happens for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to toss at us. Today, you and I, we get to go looking at the circumstances of the bulls and the bears, the buyers and the sellers. We're going to go communicate, or we're going to go figure out what it is that they're going to communicate to you and I. As of right now, we've got a flat market out here. So we'll go see if there's any little morsels that we can pick out, just like we did yesterday, right? We picked out where the market was going to go ahead and form a bottom and bounce. So there's lots of great information, and I want you to know that I'm absolutely grateful for your presence here. Now, most importantly, I'm here to serve you. So feel free, pick up that phone, dial on in, share your thoughts with all of our listeners out there. We'll put 4 eyes, maybe more, on whatever it is that you're looking at, give you the best advice possibly, and you can call us at 877-927-6648. Internationally, 727-445-1044. Let's not forget, this is Wonderful Wednesday. Of course, it's Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show. Right now, we got the Dow trading off 3 points at 17,755. S&P is totally flat, trading at 2,081. NASDAQ is up 10 points at 1183. Russell 2000 off 4. The DAX closed up 75 points, off of its session highs out there. The FTSE was up 22 points. Gold is back $5. Silver's down 12 cents. Platinum's off $16. Natural gas down almost 2 pennies. Light sweet crude off $1.34. So plenty for us to take a look at out here. You've got lead the charge the upside. We've got Amazon. That's up about $13. Maybe a result of Alibaba's Singles Day, something along those lines, where they did they had a sales counter that said they did how many ever billions out there. What they really did, I don't know. Maybe they did all those billions, 13, 14, 15 billion. In either event, it looks like they generated a bunch of revenue out there. Alphabet Soup, Google, that's up about $10. That's up 1 4/10%. Baidu is up $5. Allergan is up about $4 out here. To the downside, Intercept Pharmaceuticals off $19. Chipotle down $9. Credit Acceptance Corp, man, what an ugly looking stock chart that is. It'll be nice when that is off our screen to the downside. That's down about $7. Macy's off 15%. That's down about $7. Dillard's down 7 out there. So where do we want to begin? Why don't we begin? Had an email earlier from Rose. I like the name Rose. She wanted me to take a look at 2 gold stocks specifically, Rand Gold and GOLD. So and she's looking for a buy point out here. So we'll go try to help her. Now, I'm going to also give you my opinion. And my opinion is take all the mining stocks and stick them on the shelf. Do not be looking for buy points out there, because gold has got further to go to the downside. But nonetheless, let's go look. Now, what do I mean by that? Why would I say that? Well, for a number of different reasons. But first, if we take a look at, and what's really important, if you're watching us on TigerTV, I hope you are, it is important. Let me get rid of a couple of the lines out here. Let's do this. This way we can take a look at some market correlations that are out here in the market. Let me go ahead and turn this one off too. And what I want you to notice here, the top portion of my chart is the gold contracts, the current December gold contract. Down below it is the GDX. So this is the miners ETF out here. And you can see that just simply, they basically follow along in the same direction. There are periods of time where they'll go in opposite directions, but for the most part they're going in the same direction. So if you're going to be looking for a bottom in some mining equities, then you have to have the position that gold has found a bottom. So if you're coming from that position, we'll take a look at both the bullish and the bearish side out here, then go ahead after the mining sector. I am not of that opinion. I believe gold has got much lower to go than what we have seen thus far. Now the reasons why, number one, both you and I know that commercial traders, right? We had the early warning signal back up here at the highs in October 16th. And trust me, my clients and I, we were long mining. We were long the mining sector after we saw this test of this July 24th level. I think it was right back here, right around September 11th when we went long. I can't remember the exact date. We've been in the trade a couple of different times out here, but we exited that trade as we took a look at what commercial traders were doing, what their net short interest was as a percentage of open interest. I'm not going to, I don't have that chart handy here, but what I can tell you is that when we took a look at silver specifically, the net short interest in silver was as high as it had been for the prior 3 years. Those always have led to at least a market correction. And as of last Tuesday, because that's when the CFTC provides us with that information, so I've got to wait till Friday afternoon, 3:30. But as of last Tuesday, the commercial traders had not taken their foot off of the accelerator to the downside in silver. Now, silver and gold, if I put those charts up on my screen, sometimes they diverge out here, but for the most part, they're going to head in the same direction. Gold traders, commercial traders, had moved to more net short positions, not as high as positions, maybe in the last couple of years, but still high enough that it was a warning sign. And they started coming off of the gas pedal out here. But what gold should do, it should basically, the descent should stop for a few days, just to take a bit of a time out. If we take a look at gold, it basically has stopped for the last few days. I anticipated that one of the options was that gold could actually move up into about the 1120-ish type area, 1125, 27, 23, something along those lines. And really, it should have begun that move. Now, somebody might say that's a good trade. You're at 1084 right now to 1123. Yeah, if you are a intraday or day trader or something along those lines, yes. But that's not the reason that Rhodes was sending this email out here. And you need to be able to have fast fingers. So it's really not my opinion. It's my interpretation of what commercial traders are doing, and I won't know specifically until I see what this Friday's data is. But it appears to me that they're anticipating that gold is going to go lower. In fact, I know that we're sitting on this chart here, but I've got to lay out sometimes the fundamentals, right? I'd say there's nothing more fundamental than a stock chart out here, but sometimes there's other fundamentals that impact what we would do. If we take a look also at the euro. Let's just simply take a look at the euro versus the U.S. dollar. At this stage of the game, it broke through a level of support. What we like to use, the way that the market, I love Tom's expression that the market talks, walks, and squawks, right? And what I like about that is he's absolutely correct. Now, when the market is talking, walking, and squawking, the way that it does that to me is I take a look at bullish or bearish reversal signals. I take a look at other areas of support out here. That's how the market communicates, in my opinion, to both you and I. We had bullish reversal signals down here at about the 108 level. When those levels fail, then what we have to take a look at is other areas where there's other bullish patterns. Where is it that bulls in the past? Now, does price have to go down to those levels? Absolutely not. However, it's more likely than not, unless we see some other type of reversal signal, that that's where they're going to. In the case of the euro, it's headed to $1.05 to $1. It's right around the $1.05 level. That's really its next set of swing points out there. The euro is 60%, 57% of the weighting inside the U.S. dollar index. That says, as this goes lower, the U.S. dollar index is going to go higher. If we took a look at another correlation chart with regard to gold, the direction of gold and the U.S. dollar, we'd see that this has a direct correlation out there. So at this stage of the game, this says U.S. dollar index goes higher. If we take a look at the Japanese yen out here, the yen had this really nice wide-ranging bar back on November 6th. It's just taken a little bit of a pause the last couple of days. It looks to me like the yen wants to get weaker, and it wants to get up to 125, somewhere around the 125.25, 125.81 level. If that it's broken above a level of resistance out here at about 121. So if that wants to get weaker, the U.S. dollar index wants to get stronger out there. You know, if we took a look at the Great British Pound, just to really wrap up the currencies out here, the Great British Pound, you know, in essence, has held a level of support all the way back here from May 4th. So the Great British Pound, you know, maybe that's not going to continue to move lower down to about the $1.45 area, but just enough between the euro and the Japanese yen says the U.S. dollar index is getting stronger out here. So you've got the commercial traders that have positioned themselves for lower price in gold and silver out here. We've got the currency pairs that are just the opposite, saying that the U.S. dollar index is going to get stronger. So why is it that we believe that gold is going to go ahead and find a bottom? I can't figure that out. So nonetheless, let's still go searching around, because there is some. Let's say that all of this analysis is just absolutely silly. It doesn't even make sense out here. Well, let's go take a look at those two trades. Let's go take a look at what could be a bullish pattern. Let's start with RGLD, Royal Gold out here. Now, when we take a look at Royal Gold, let's actually do this. Let's do this and put it on a monthly chart out here. I want to show you something. And if we take a look at Royal Gold, what it's actually doing, it's only November, what did I say, November 11th. Yeah, 11/11 today. We're not even halfway through the month. And the swing point that Royal Gold is taking out on a monthly basis, the swing point from June of 2013. Now, that swing point had volume of 19 million shares. We've done 15 million shares, basically 14.6, so we'll call it 15 million shares in just the first 11 days of trading. And prices trading below that low, which is 38.63. You're at 37.27. That is a monthly A to B equals CD to the downside inside of Royal Gold. Now, if Royal Gold can hold the 38.63, meaning by November 30th, I'm not sure if that's a trading day or not, by the end of the month, if it closes back above 38.63, we will have a rejection of a swing point with volume. That says that price has got to go back down there and test that. But right now, let's go with what we do know. What we do know is this has the potential on a monthly basis to give you a large A to B equals CD to the downside. You're not going to like it. Or if you want the buy point on Royal Gold, it's about $20.63. It's trading at 37.29 as we speak right now. So on a monthly basis, this thing looks horrible. Now, if we switch back over and we take a look at the daily chart out here for Royal Gold, you can see we have this huge wide-ranging bar on November 5th to the downside. That had volume of 4.6 million shares out there. So that obviously, you know, the average volume out here looks like is about 600,000 shares. So let's assume we have another 10 trading sessions, another 5 million. You know, it gets us over the swing point volume that we just took a look at on a monthly basis out here. When we come back from this break, we'll finish off, take a look at Royal Gold. We'll also take a look at, what else was it? Rand Gold. And this is Steve Rhodes with TFNN. We'll be right back. Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
TigerTV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. TigerTV, exclusively at TFNN.com. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Let's go back, take a look at Royal Gold. RGLD is the ticker symbol. Now, I've got the daily chart up on my screen, and the date of June 26, 2013 is the swing point that got crushed. Now, that swing point had 1.9 million shares. As price was moving down on the trading day of November 5th, that was 4.6 million shares. It was then taken out the very next day with 2.6 million shares out there. You've got another small A to B equals CD, which was the September 11th swing point that had 976,000 shares. That was taken out with 4.6 million shares out there. It just does not look good for Royal Gold at all, RGLD. Now, depending on the time frame that you want to trade, can I make the case or see where gold and or silver could bounce? Absolutely. Yeah, it's oversold, and so it could bounce. What I don't want you to do is confuse a bounce with a bottom. They both start with B, but we're not at the bottom level. Now, in the case of Royal Gold, if it can close above 40.97, that happens to be a brand new TAS market profile daily out here, and that's the high, 40.97. And then this thing could bounce up even to, $46, maybe even beyond that. But it really looks, you need to see a sign of strength inside of RGLD. It looks bad, looks horrible on a monthly basis, looks horrible on a daily basis. If there's a sign of strength, let's just say we're wrong, with regard to, I'm wrong with my interpretation of what commercial traders are doing. I'm flat out dead wrong with regard to the U.S. dollar index moving higher. And I'm just wrong. If I'm wrong on all those things, then what you'll see is a sign of strength inside these mining equities. We've seen the sign of weakness. Now what you need to see is a sign of strength. See a sign of strength, you let it go ahead and pull back, and then you could buy into it. Then you're good here. If we take a look at a chart that looks a little bit better, GOLD, Rand Gold Resources, at least this isn't below, swing points going back on the monthly chart out here. This thus far has just simply made a retracement from low to high, September 14th, to the high out here on the trading day of October 28th out here. It's made its way back into the 0.786 retracement level. But it, too, was coming down with accelerating volume gap down. That's a wide-ranging bar. Let's just do this. Let's turn that off. Let's turn off the Fibonacci. You might take a look at this candle on November 6th and not really take a look at it as being a wide-ranging bar, but it is. What you've got to do is you've got to fill in the gap. If I color that candle in from the close of the prior day down to where this thing closed, it's the widest ranging bar to the downside yet out here. So, gaps, visually, your mind doesn't always pick up on them. Go ahead and color them in, and then you'll understand the power of gaps. That's why gaps up are so strong, because if you saw a big, wide-ranging bar, you would be like, wow, that's a breakout. And then when people see a gap, all of a sudden they get afraid and they say, oh, shoot, that gap up, it's going to get filled. Sometimes things come back to their breakout area. We teach you how to buy breakouts, but not always. So a gap is not the end of the world out there. In fact, it's a great tool to be able to use out here. Now, the cool thing about Rand Gold, let's say that again that I'm just dead wrong. Dollar's going to move lower. Gold is going to be moving higher. It's formed this huge bottom. Wait for Rand Gold to form an actual island bottom reversal at this stage of the game. You see, it's got this nice little gap to the downside on November 6th. If this thing can gap up in any time over the course of the next couple of days above 61.10, then Rand Gold would give you a nice island bottom reversal out here. But other than that, I don't know if that's really likely to happen. If we look at the TAS market profiles out here, this actually says that Rand Gold is likely to come back to test the swing point low from back here on September 14th. So somewhere between the level of 54.88 and 56.36, 56.60 is the weekly TAS market profile low out there. I don't know that those are going to actually hold as gold continues its descent lower out there. So as of November the 11th, that is what it looks like to me the mining sector wants to do, and I'd say just stay away. If you're an intraday trader, a whole different scenario out there. But otherwise, I would just say go look someplace else for some trades out there. So I hope that helps. There's also another request that came in asking me to look at GE. So let's look at it. Looking for the long side is what this listener is looking for. So let's take a look at General Electric. See what it's done. We'll try to use a couple of different tools out here to figure out what General Electric is doing. Nice day today, $30.59 out here. That trading session back on August 24th, what it actually did, the candle that it formed out here, oops, I'm sorry, I don't have it on my screen out here, that actually qualifies as a hammer candle out here. Pretty heavy-duty wick, but because that lower wick is so low, technically it's but look, let's not worry about that. When we come back from this break, let's go take a look at General Electric. Let's go see what it's trading into, where it's trading, and we'll see if we can find a buy entry for, I don't have the first name. Steve Rhodes with TFNN. We'll be right back.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization memorization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's nadex.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Technomental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN has just announced a brand new morning lineup that is geared specifically for traders in this volatile traders market. Every morning at 8 a.m., John Logan starts things off with his daily program, The Global Market Pulse. At 9 a.m., Larry Pesavento trades the market during the market open Monday through Friday on Trade What You See. At 10 a.m., Tom O'Brien hosts the Money Masters for the hour, and Basil Chapman hosts his Tiger Technicians Hour at 11 a.m. From 8 a.m. till noon every market day, these traders are with you as they provide up-to-the-second market information so that you can make the most educated and profitable trades possible. The new TFNN morning lineup is happening right now. Tune in to see for yourself what kind of actionable trading discussion they have each morning, Monday through Friday, starting at 8 a.m., live only on TigerTV at TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow's off 21, S&P off 2.5, composites up 2, Russell's down 6.5. So back to General Electric. If we take a look at General Electric, let me show you something. Right now, it's trading out at about $30.60 out here. Now we're going to take a look at the long-term chart. This is the monthly chart for General Electric, taking us back into 1994. Now the blue horizontal lines that you see on my screen, those are the horizontal trading range boundary lines. That's the daily that we're looking at. We're looking at a monthly chart just so I can show you all the data out here. But the blue lines represent the daily horizontal trading range. Those are going to be different than the weekly and the monthly out here. But it is the daily that shows that, hey, there may be some resistance ahead. Now, you can see that at $30.82, you're at $30.60 right now. You'll see a little bit of a dashed line on my screen. That's the midpoint between the daily ranges out here. The daily ranges go from $16 to $26, so it's about a 10-point, and then 26 to 36 as an example. You'll see cents on my screen out here, but that's just simply because it's using exact data because it's all calculated electronically. But we use it. It's called a horizontal trading range being the key. So, we're not trying to get exact to the penny out here. So at this stage, General Electric may be right at a resistance level. And then, take a look at a pullback. It should be able to hold $25.91, $26. So if it does pull back, $26 would be a possible entry point into General Electric. If it is able to get above $31, we'll go look at another chart out here, then $36 is what's written over it. Now, when we take a look at the daily chart out here, just if I go from the swing point of April 10th, that high, down to low on August 24th, this says to me that price ought to be able to make its way, a 1.272 expansion, ought to be able to make its way up into that 31.21 level, and you're at 30.63. Unfortunately, I don't know why my system sometimes it slows down right around this is the time of the day, and I can't get the market profiles for General Electric for you, so I can't help you out there. But again, a pullback into the $26 level looks to me like that would be a place to take a look at buying it. Now, this had some nice volume yesterday. The volume to the upside, I don't know, 239,000 shares yesterday. I don't know what GE did or said or sold yesterday, but it had some pretty nice volume inside of the equity. So hopefully that helps you out as well. I have a request to take a look at ticker symbol here, ZFGN out here. That is ZAFGen Inc. It's trading at $12.72. You didn't tell me whether you were, Paul, if you're looking for a long. I imagine you're looking for a short out here. Wow, that's interesting. The market profiles went ahead and populated on this, but they wouldn't on GE. Oh, well. I thought GE brings things to life. It was not bringing it to life in my stock chart out here. So with regard to this, I don't know what ZAFGen does, but this thing had a move lower with some pretty big volume over the last couple of weeks out here. Was moving lower on October 14th, 13 million shares to the downside. Moving lower on October the 16th with 8.6 million shares to the downside. A positive, I suppose, is that price is above its most current daily profile, but I wouldn't use that for a hill of beans out here, so we're just simply going to turn that off. We won't use that as a guideline. So what this equity needs to see, much like we talked about in the case of Rand Gold or what was the other one? In any event, Royal Gold out here, you've got to see some kind of sign of strength. This thing does basically a couple 100,000 shares, 700, 500, 800,000 shares. You need to see some kind of sign of strength. Now, today might be it. You've got, I don't know what this company does, but you've got nearly 1 million shares to the upside. But this thing is going to potentially run into some trouble right around here, which is that gap to the downside with 8.6 million shares. So watch to see its behavior at about $15. If it can close above 15, Paul, it probably heads to 19.12, and that could be the significant level of resistance inside of ZAFGen. Ticker symbol there, ZFGN. Hope that assists you as well. All right, so back to the markets out here. We haven't actually begun taking a look at the markets. Wanted to do all of the special requests out there. I don't see any additional ones. So let's start peeking around to see what we can see. NASDAQ Composite, which is flat. Let's go take a look at the NASDAQ Composite, which is right now, price oscillator is down below zero. So as we take a look at the markets right now, if the markets were closing at 1:39 p.m., what I would tell you, what I would communicate to you, what really the markets are communicating to you and I, is all four of these indices that we're looking at, New York Stock Exchange, NASDAQ Composite, Dow, and S&P 500, are in the hands of the bears. Now, I don't know whether they're on the 20-yard line and, they just called for a fair catch and they're going to try to march it downfield and score a touchdown. A touchdown says that the S&P 500 gets down to 2020. maybe it only gets down to 2050 or 2079. Still 30 points to the downside out here. So somewhere between 2050 and 2020 is likely the target. If they get to 2020, that'll be a touchdown. They can spike the ball. It gets back to the September 17th high out there. If in fact the NASDAQ, now we're going to be, it's an easy day. It's a light volume. I'm pretty sure it's a light volume day. We'll go take a look at volume out here. Should be a light volume day with banks being closed, the bond market in essence being closed out here. Just simply a good day to take off and honor our veterans out there. But nonetheless, if it does close like this, we've got all the price oscillators down below zero. It suggests that we should see lower price. And as long as the NASDAQ composite were to have some additional follow through tomorrow, that would basically set the hook for lower prices over the course of the next 4, 5, 6 trading sessions or so, something along those lines. And then we'll go ahead and assess things as we see what the market does. So at this stage of the game, the bears are in possession of the ball out here. If we take a look at the VIX index, see what it's doing, key level for it to stay above right now around the $15, 1509-ish, 1512-ish area. You trade right now at 1570. That says the VIX ought to get up to about 1758 out here over the course of the next few days. If it closes below 1509 or so, that says that the was like a one down interception that was thrown out there. I don't know who that quarterback would have been. Maybe it was, I don't know, who's thrown the most interceptions this year in the NFL out there. I don't want to throw out any names because I don't know, but maybe somebody in the den will look that up for us. But in any event, it would be somebody throwing an interception out there. Let's take a look at. Let's look at volumes out here. Let me put up my other chart to get a feel for where we might be at from a volume standpoint. So the Qs have done 14 million shares. Yeah, that's light volume. That says that 1:30, we've been trading for 4 hours, a little over 4 hours. Going to do about 20 to 23 million shares out here. So there's our light volume day. It's it being a holiday, I don't think we can put a whole lot of emphasis on any pullback or any move higher. It's just simply going to be a light volume day. Ideally, for the bulls, you would see a close above 113.48. For the bears, a close below 113.48. That happens to be the low from July 20th out here. The key is what happens and with price as it gets down to that breakout level, that October 23rd area that's got 53 million shares. First test is at 112.07. Second test is the high of the prior day at 109.80. I'm not saying that's going to happen today, but that's the area to be watching for out here. So light volume day. If I go take a look at what's going on inside the NQ, we took a look at that yesterday. We looked at how price was moving lower, doing it with less relative weakness out here. We saw that coming in at 10:30. By the time we did the show out here, the suggestion was, hey, the market was going to likely move higher. We were going to see a move up to about 43.67. We most certainly got that coming into the 4 p.m. time frame. And the market went ahead and it had made a slightly higher high, pulled back from the seventh wave move this morning, and then it just simply powered on up through above that level. So where are we at? Price has not moved higher with less relative strength out here, so we don't really have any kind of topping pattern as we say right now, at least on the 30-minute chart. But you can see, those seventh wave moves have been great for being able to identify short-term tops and bottoms out here. Of course, we're only using a 30-minute chart. If we take a look at the 2-hour chart inside of the NQ out here, right now, I can see it's got a new profile. That profile says there should be resistance around 46.62 or so out here. We showed the price relative strength divergent pattern in that 120-minute chart yesterday as well. What else should we look at? I don't know if there's any real patterns out here. We've looked at currencies. I've belabored gold for you, so we don't want to go there. Light sweet crude. Let's go see what's going on in the case of light sweet crude, and we'll take a look at natural gas too. So as we take a look at light sweet crude off 123, $1.23, what is it doing out here? Let's take a look at USO. I'll get a better gauge maybe for volume on USO, because we can see it's testing a swing point out here. So let's see what we've got. So the swing point it's testing is October 27th, 26 million shares. 24 million shares is what you have. 14 million shares is what you've done so far. So you're moving into a light volume. If the USO closes above 113, below 113.85, then that says that the low gets tested, maybe busted, 1361. If you see it close back above 1385, you'll have a rejection of a swing point on price and volume. That is USO. That is the United States Oil Fund out here. And so a good way for us to gauge volume and or what oil wants to do. If we look at natural gas, 4 cents right now. Natural gas had a lot of promise. Maybe it still does out here. But if we look at the 30-minute chart for natural gas, let me pull this back. What we can see is coming off of a recent low out here from back at around 8 o'clock in the morning on October 30th. Nice little rising trend line. Those are the green lines, or the green line on my screen out here. And natural gas broke back through that level yesterday at about 5 o'clock. I'm sorry, this morning at about 5 o'clock. It actually now has a downtrend line that is in place. If we take a look at this little downtrend that seems to be in place, there's your resistance level. Now, we don't have to worry about the cone of silence because it's not trading with inside this. And this is a 30-minute chart out here. But in order for gold, in order for natural gas to convince you and I that it's ready to move topside, I would say it needs to be able to close above that red diagonal line, whether you use a 30-minute, a 10-minute, a 120-minute chart out there. You'll see that trend line that is in place. Now, what we're likely to see is a move back to about 226. We're 227.6 right now. This is where we saw a breakout. We had some decent volume on a 10-minute bar. We had a nice wide-ranging candle here on the 30-minute chart. So we'll see if that area holds. If it doesn't, well, then, again, we're looking just at a short-term chart out here. I think it's worth paying attention to because, natural gas may be trying to find a bottom. Now, coming back into the 226 area, if it can hold that, comes back to a place where it broke out. It also is a 0.618 retracement of the move off the bottom up to the top out there. If that level fails, then we're likely coming back into 218 to 223 out there. Let's take a look at the 30-minute chart for the current contract for natural gas. I mentioned moving to the upside, we had Amazon, Google, Advanced Accelerator, I don't know what that is, Regenerate Pharmaceuticals. Let's take a look at a couple of those. Let's look at Amazon specifically. If we look at Amazon, what is it doing here? Amazing. Amazon, well, in the world of, well, I had it out here. In the world of, we took a look at General Electric and its expansion of swing points. We're going to do the same thing here with regard to Amazon. Now, that's a daily chart that we're looking at. Swing points July 24th, the high 580.57, down to the low on the trading day of August 24th, 451. You can see you cleared the 1.272 expansion, and you cleared that with a gap up. So you had a wide-ranging bar. You had another acceleration of volume. You're above the 1.618 expansion. You're up at that, which was at 660. So it looks like you're on to the 2.0 level, which is about $710 inside of Amazon. If we look at a longer-term chart here for Amazon, let's look at a monthly chart. Just simply, you can see on the monthly basis, that was a logical A to B equals CD pattern. You can see that it's right up at the 675-ish area. You're at 672. Looks to me like this pattern says 767 could be in the cards for Amazon as we take a look at the monthly chart. Let's look at some equities that we have not looked at. Let's look at Baidu. I don't recall you and I looking at Baidu in quite some time. So this looks like maybe a little sympathy trade to what went on over at Alibaba today. If we take a look at Baidu, let's take a look at a daily chart out here. Give me a moment. We'll switch over to that time frame. The daily chart. So we can see that Baidu is coming up into a couple areas of resistance. That's where we saw a breakdown that began in the case of Baidu back on April 30th, 2015. That was 11 million shares to the downside. We're up, for example, today on only 3.5 million shares. It's kind of been in a 3-4 million share range here for a while. It looks like 205 to 211 is written in the cards for Baidu. Trade right now at $200.60. Steve Rhodes with TFNN. I'll be right back.
Are China A shares hot or not? If you trade China A shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A Share Bull and Bear ETFs. China A shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
If you're looking for a great opportunity to diversify your financial portfolio and hedge against the falling stock market, consider the new market-safe Metals Hedge CD from Everbank. This 5-year indexed U.S. dollar-denominated CD gives you exposure to metals with gold and silver components and allows you to hedge against falling equities with a short component on the SPY ETF. You can earn up to 45% capped upside payment at maturity if gold and silver increase in value and the SPY ETF decreases across annual pricing dates. And should the opposite occur, your principal is 100% protected. Keep in mind, returns are based on CD performance. There is no annual percentage yield or periodic rate of interest on the CD. Don't let fallen markets get you down. Get the Metals Hedge CD. The November 12th funding deadline is quickly approaching, so hurry over to everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. Once again, that's everbank.com/TFNN. This is sponsored content. Everbank is a member FDIC.
Join David White as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
Welcome back, folks. Dow's off about 8. The S&P down a point out there. Let's go take a look at the retailers. Not a good day to be a brick and mortar retailer, that's for sure. And maybe not as good. Maybe it's not a good day to be a retailer at all. Alibaba, they supposedly broke the previous year's record of racking up sales on what's referred to as Singles Day out there. Did more than 14 billion in one day, so that's a heck of a machine out there. If we take a look at Alibaba, BABA was the ticker symbol. I can't believe I just deleted that. Now, that's no fun because that means everything else that I had on that chart is gone. So, lordy, oh well. We're going to go take a look at it anyway out here. But that was a mistake. Oh, well. They happen, do they not? So let's take a look at Alibaba. BABA is the ticker symbol. Maybe look. Oh, that's actually put that in the wrong spot out there. That was a brain contusion. All right, so let's take a look at Alibaba. No celebration by shareholders today inside Alibaba. It's traded out at 79.68. Now, this thing has really come back to a level of support. Let's go check out the volume. So this had a nice wide-ranging bar, so to speak, on October 27th, 50 million shares, a little breakout there. That 50 million shares was going into where it had gapped down with 12 million shares. So that's not too shabby. We're talking about the swing point from July 24th out there. So that's the, and it went on and tested the high, eventually tested the high and found support. Today, you're pulling back with 24 million shares going into 50. So it's coming back with light volume out here. And that says that if we take a look at just a simple trend line out here, it looks to me like that trend line from November, got to grab the right tool, from the November high, so a year ago, from that high, looks like that downtrend has been broken. Yeah, that was broken for sure. So let's take a look, see if I can get some no, I can't. Well, I'm not going to, I'll do it. What the heck? You guys can be patient with me. I was going to go put the market profiles on out here. I just have to go find them. Where are they? Sometimes it doesn't always stick right out at me, so that's why I was considering not doing it. Nah, it's not. Where is it? We won't pay attention to it. But it does look like Alibaba has broken out, and it ought to make its next move up into about the $95 area, so long as it can hold this level of support. The next level of support, if it breaks through, would be down at around the 72.84 to 71.63 area. However, if you were in the brick and mortar business, if you were in Macy's as an example, or Dillard's, it looks basically just disgusting and horrible. Take a look at Macy's. They were out with numbers gapping down, huge volume today, 30 million shares to the downside. When we put this on a monthly chart out here, you'll see what I see. It has broken trends. It looks like this is headed, if we just look at retracements from 2008, to a high out here back in July 2015. Looks like this is headed to its next level, which would be 31.25. Maybe it doesn't even stop there. You're at 39.90. I hope that you are not inside of Macy's. Dillard's, I believe, is DDS. And that stock today, let's put this on a daily chart, also moving lower. It too broke a trend line. It's taking out a most recent swing point from October 2nd, that at 485,000. You're already at 805. This thing has also made a 100% move by getting back to levels out here in the, oh, wait a minute, this is the monthly chart. Must have been Macy's that I was taking a look at. Well, folks, our Wednesday is over. If you're a veteran, I do salute you and thank you for the service that you have given to this great country. Hope you have a great day. Stay tuned. Our man David White is up next, and then Tom O'Brien from 3 to 5. I'll see you on terrific Thursday. Have a great day, folks.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
You're watching Tiger TV.